Good evening, traders. Today is Wednesday at 9:13, and I'm looking at Urban Outfitters Company. The symbol is URBN, and this is one of the gapping plays that I like to trade. If you go to my YouTube channel and look on the right-hand side, I have a playlist named Gap Strategy. I just added it today, and this video is going to be one of many. I'm going to have a part 1, which is me showing you the setup, and then I'm going to have a part 2, which is the conclusion of the trade. I'm going to show you where to set your alerts, and this is going to be a continuing thing every time I see a gapping stock that pertains to my strategy. Also, under playlist on the right side of the YouTube channel, Tech Wealth, you're going to see economic indicators. And I'm going to continually add them on a weekly basis because I know it's a lot easier to watch a video of something than to actually read it. Me personally, I understand watching the video rather than reading it, and they're all going to be in one place, so you don't have to go around and look for definitions. So say tomorrow morning you have an economic event that comes out at 10 a.m. Set your alarm, and then you already know the definition. So I'm just trying to make the learning easier. Alright, so first thing, we see that we're clearly in a downtrend on Urban Outfitters, making lower highs, and that's never a good thing, along with lower lows. It looked like we had bottomed out around the 22.58 level, and then today we had the news come out. They say that the CEO Glenn T. Sink had resigned on Monday to pursue another opportunity, and said co-founder and chairman Richard A. Hayne would take the CEO post effective immediately. And then they said that the apparel retailer said Sink will remain with the company for a period of time to assist with the transition. Alright, so fundamentally, I think it's the same company. This guy's obviously a co-founder that's taken Glenn T. Sink's place, and they put in the news article that Sink was going to stay on just to give investors a little insurance. So for this gapping trade, we're down 18%. Lovely gap. What do I see here? Now, when you're going to trade this strategy, I'm going to tell you in this video, and then you'll learn from the other ones. Set an alert at the high of the candle, and then set an alert at the low of the candle. Right now you see my alerts a little lower because this is a multi-year opening pivot. Usually I'll set it below it, and I'll expect maybe consolidation, then a move down. And then if we move back up here and move down, that's where I enter my short, and I'll eventually go over them if that's the case. But what I'm looking for is if we did approach 22.58, that might be a good long opportunity to at least get back up to this low. If we break through 24.68, consolidate and move up, then you might want to take another long on that. So relatively, I think the move is overdone. It's not that bad of news. So I have a more bullish bias than bearish on this play. And set your alerts at these levels, and we'll watch this one play out, and I'll update you on how I'm trading it. So it might be 3 parts. Alright, good luck, traders.